Hi guys, welcome back. This is gonna be the summary of video 4 of the ICT Mentorship 2023. Price action review and afternoon session reversal model. In this episode we are gonna see PD array matrix, a bullish power of 3, and institutional order flow entry drills. We are looking at the E-mini S&P 500 futures on the one-day time frame. Today is Monday 24th of January 2023 and this is the price movement of the previous days and weeks. ICT tells us that there are possible levels for the price to target if the price goes higher and so if we are bullish. And those would be those two black lines. ICT mentions also these two dotted lines as the midpoint of the subsequent bearish wicks candles. That is what he refers to as consequent encroachment. We can see also here that we have a big fair value gap, and specifically this fair value gap is a CB, sell side imbalance, buy side inefficiency. ICT tells us to use the PD array matrix, meaning that we will look at past specific candles to see patterns, and we look back in time for 20, 40 or even 60 days. He tells us that the highest form of sensitivity we will see on the 20 days, so in the past 20 days. And when we are looking to see the past specific candles and their patterns, and so when we are using the PD array matrix, we are trying to spot the next fair value gaps, order blocks, breakers, institutional order flow entry drills, consequent encroachment, mitigation blocks, rejection blocks, old highs and old lows. So let's try to use the PD array matrix. Let's look past at the big bearish candle. So let's look and see what's before the big bearish candle. And right away we can see that long wick. The midpoint of that wick is consequent encroachment at 3982.5. And we will remember that level to use it later. What we would like to see is the price to open and form this candle that you see here in bright green, from the consequent encroachment to the swing high. A question that we will ask ourselves is, does the market have the strength to go high with energy and conviction and break through the buy-side liquidity? ICT reminds us of the power of 3. On the next slide, I'm going to show you my notes from the Mentorship 2022 that regard indeed episode 9 that talk about the power of 3. Let's check it out. So when we have a bullish power of 3, as seen in point 1, we would expect the opening price at 8:30 New York local time to be near the low of that day or of that session. In point 2, we would expect the price to trade a little bit lower. In point 3, we would expect the price to rally up. In point 4, we would expect the price to create a new high. And finally, in point 5, we will expect the price to close near the high of that day. Now, going back to our E-mini S&P 500 futures, always on the one-day time frame. I want to show you the whole price movement, always on the one-day time frame. What we have seen with the higher red line is the older rejection block, but we also see the high of a bearish wick and a consequent encroachment of the previous candle. Now, let's go into the 1-hour time frame. Let's observe the price movements. The first thing that we can notice is the relative equal highs, where we see the buy-side liquidity. Underneath it, and as those relative equal highs were forming, we have consolidation. Then the price goes lower. There is a smart money reversal, a low-risk buy, accumulation, again, consolidation in an area that ICT tells us it's quite tricky. And again, accumulation that brings the price to go higher than the relative equal highs formed before. ICT tells us that this area with an orange circle is tricky because this drop down of the price was very low and not much of a deep retracement. We have here, guys, two fair value gaps. The first one, the one in pink, is a balanced fair value gap because, as we can see, the price later on went back and revisited that level, while the fair value gap in blue is still open. Allow me to just remind you the power of 3 through time and how it looks like. And this indeed, guys, is a very good example of it. So guys, let's look again at the two fair value gaps, and this time on a 15 minutes time frame. Now, jumping into the 5 minutes time frame, ICT shows us this. And we can observe and notice here the main levels. We have buy-side liquidity and sell-side liquidity levels. We have an order block, and we have fair value gaps. As you can see in the red circle, that little dip of the price was enough to send it running into the opposite direction. Right above it, we see a busy. So guys, allow me to zoom in and reorganize our thoughts about this price movement. First, we see a shift in market structure. Then we see price taking over sell-side liquidity. Then we see a busy forming and price tapping back into the busy, but only with the wicks of the candle. ICT actually wanted to see the price doing this, so it wanted to see the price going higher, but then coming deeply lower into the fair value gap, and then jumping back up. This is the price movement on the 1 minute time frame. Let's take a look to it. When ICT is bullish, he wants to see the price forming a PD array that becomes an inversion level. Now let's zoom in this area here and let's analyze this price movement. So this is the zoom in, you can observe it for a moment. We see here some lows and some highs. The first low in orange gets taken away by the low in red, which makes then the high, like the high in green, between those two lows, very important for us. You can see here a yellow rectangle that's highlighted, and that's a bullish breaker. It is the last big green candle that the price formed before it took away the previous low. And ICT highlights it all from the top of the wick to the bottom. What happens after is that the price then takes the liquidity away from the bullish breaker, so from the yellow area, going above it fiercely and below it very quickly. Now, going back to the wall price movement. This is a highly manipulated market. It could have also easily gone into the mode of seek and destroy and never gone above the high signed with the red line. So guys, remember, we see some possibilities happening and the price being more likely to do one thing or the other, but we are never 1000% certain. What we see though is precision in the execution. Now I'm gonna zoom in back again and show you this fair value gap. Look at this price movement. When the price has come back to touch that fair value gap, it covered it completely and it entered inside it with the wall candle body, not only with the wicks. Between 9:50 and 10:10 AM New York local time, there is a macro, which will tell the algorithm to seek another order of instructions. I'm gonna tell you how I think about it, guys. So between 9:50 AM and 10:10 AM, the price will do something random, okay? Keep it in mind and ignore it a tiny bit if necessary. It will come back to the previous instructions and deliver them after 10:10 AM has passed. So in this case here, we can see that the price has kind of consolidated between those times, and it makes it look a little bit weird because we were actually expecting it to go higher at that time. So now, zooming out and looking at the price movements after that, we see this chart. As you know, guys, here you can see that between 12 and 1 p.m. New York local time, ICT put some vertical lines, and I know that you already know what's coming. between 12 and 1 New York local time, we do not trade. Usually in those times there is consolidation. ICT tells us that if the lunch hour has formed some lows and in the afternoon it happens that we have a reversal, the price becomes, for example, bearish in our case. The price will target those lows formed during the lunch hour. And so those are going to be some levels that are important for us in the afternoon. ICT talks about it in our specific case this time as the lunch hour sell side liquidity. Let's observe the price movements after lunch. With the big black arrow you can see here a fair value gap, a busy. And that fair value gap happens right at the old high level. We could actually be entering short here where you see the big black arrow on the green candle when it retraces back into the fair value gap. Now, if you look towards the right side, you can see on the chart the big bearish candle, and ICT tells us that that's actually a macro that happens at 2 p.m. So let me tell you a little bit about the afternoon session and the inversion levels. There is a macro that happens at 2 p.m. If we have a high that runs on a higher time frame, plus if at the same time we also have an imbalance in there, after that the price has traded through that imbalance, that means that that level will become an inversion level. Let me repeat it, guys. What are the elements, the key elements that we need to have an inversion level? A high that runs on a higher time frame, an imbalance. After the price has traded through that imbalance, we will have an inversion level. And this is it for this episode. Guys, keep going, do not give up. This is the way. Remember, guys, if you focus on something, you're gonna make that something grow.